What is up, everybody? Welcome back to another episode of Bitcoin and Markets. Happy Monday out there. Hope you guys had a relaxing weekend. We are jumping right into it here on Monday with the free fundamentals report. And then, I send that out every Monday and then I go through it. We discuss, I answer any comments that you guys have. I am live streaming on YouTube, Rumble, Telegram, and Twitter. So if you're watching on Twitter, jump over to the YouTube or the Rumble. Links are in the pinned tweet. And there you can make comments, ask questions, whatever. But all right, let's jump right into it. Share my screen. Bitcoinandmarkets.com, free weekly newsletter. Just sign up for the free tier here on the website. There's also tiers to support my content for $5 a month, or the premium tier, which has a very high quality technical analysis, macro analysis, looking at all sorts of things about the market. So let's jump right in here to the Bitcoin fundamentals report. Number 296. And quick navigation. So these are all the different sections in the newsletter that you can just jump to: headlines, macro headlines, price analysis, mining, and layer 2. I try to cover the entire industry. So if you are new to finding my content, this is what we cover. Snapshot of Bitcoin. Weekly trend, we do have a possible bottom here. We will definitely take a look at the price chart. I am one of those people that think price is the only thing that matters. If price constantly sold off year over year, nobody would care about what great things Bitcoin offers the world. You have to have appreciation in price to kickstart all of the benefits that Bitcoin will bring to the world, and how Bitcoin will make the world a better place. So price is the only thing that matters, and we will take a deep look in price in the price section. Media sentiment is still indifferent. I did see something drop just before I went live after I published this, so it should be on the report for next week. But that was the Republican Party, what is it called? The Republican Party platform that they have, and Bitcoin is in there, protecting Bitcoin self-custody and Bitcoin mining. So that was a big thing that is making the rounds right now. But overall, the media sentiment is indifferent. Haven't noticed a lot of action either way, positive or negative, for Bitcoin. So there you go. Network traffic is very low. We'll take a look at the mempool, fees, and all that. Mining industry is struggling and shifting. They're moving to AI, kind of diversifying some of their revenue streams. But we will take a look at one article on that. Price this week, at the time of writing, 56,525. That's down 7,200 in the last week since the last issue of the report, or 11%. That is nasty. It is hard to stay positive here in Bitcoin. But 2 weeks ago, I was getting negative. The last 2 weeks, though, after I did a deep dive and reinstilled confidence in myself in Bitcoin, then this last couple weeks have been actually pretty easy to get through. But don't forget, have a low time preference. That means you don't care if it's going to go up or down this week. You care about this year, this 4-year period. And so, yeah, that's how you have to look at it for Bitcoin. Market cap is still over $1 trillion, holding on to that trillion mark at 1.1 trillion. Satoshis per dollar, 1770. Let me just check my levels here. I got a sinking feeling I was muted on Telegram, but I am good to go. All right. One finny, that's 1/10,000th of a Bitcoin, right in smack dab in the middle of the decimal places, is $5.65. Mining sector previous difficulty adjustment was this weekend. I believe it was either late Friday night, early Saturday morning, and it was almost exactly 5% down. The next estimated adjustment then is still 10 days out, so anything can happen, but it's on track for a 1.5% increase. Mempool is down 20 megabytes on the week, report to report, and so it's sitting at 175. Fees for the next block, absolutely tiny, 47 cents or 6 sats per virtual byte. This is the time when you need to be consolidating UTXOs. For new people, every time you make a transaction, you're most likely going to get, you have to get a new UTXO. So you'll get a new UTXO, and then when you spend, if you're spending from a lot of little receives, it's going to be more expensive because all of those receives need to be signed and they need to be in a transaction. So it's going to be a larger transaction in bytes. So your fee is going to be higher. So in these low fee times is when you want to consolidate all of those receives and send it back to yourself in one big receive. That way, when you want to spend it later, when fees are high, then your fee will be lower. So that's what we mean by consolidating UTXOs. Low priority fee, you can't save really any money by waiting. Also 47 cents. Capacity. Lightning Network capacity is once again up. The number of Bitcoins in the Lightning Network went up by 45 week over week, almost 1%. So this is 3 weeks in a row that we've been over around 1% increase in the capacity. However, channels continues to tick lower, 51,050. So over 0.5% lower in the number of channels. This is the pattern that we've been seeing over the last month. Higher numbers of Bitcoins, lower numbers of channels. Okay, and this is in case you missed it. And guys, before I get too far, I'm hearing thunder here locally, and I hope my Wi-Fi or my power doesn't go out, my modem. So if that does, I will jump back on streaming as soon as possible, but just be aware of that. Okay, in case you missed it, Bitcoin Magazine Pro stuff, I am still writing for them, but you can find most of that on my website as well, just a couple days delayed. So check out the premium content on my website here, bitcoinandmarkets.com. And I write some blog stuff as well. The latest one is still this demographic collapse, but I am writing my macro thesis out in long form, so hopefully I'll get that out soon. All right, headlines. Let me check and see if there's any comments yet. Am I streaming on all of my things here? Streaming. Interesting. Okay. Well, let's get into headlines. So Germany now has moved over 16,000 BTC to exchanges to sell. Something is rotten in Deutschland. So here we go. This is a quickly moving target, though. Oh, shit. Okay, so 5,200 early this morning were sent, and then a bunch were sent, and total today is 16,000. I actually have this pulled up here on a different tab. This is from Simply Bitcoin on Twitter, and you can see just today, 16,000 went to exchanges. This is a nasty sell candle. However, if you do look at price is green on the day. So there is just as much demand as there is supply right now. Excuse me. Okay, let's get back to the report. So I still do not see this as a result of an anti-Bitcoin stance. Now that is getting harder to defend that position, but I don't think it's like the German government saying we're trying to crash Bitcoin. We hate Bitcoin, right? I see it more as Germany is needing money badly. They need this money. Their institutional base continues to, the industrial base continues to collapse. They're in a rapid worsening demographic collapse as well. And they are suppressing the democratic process there. I saw just today, they were saying that the ADF, members of the ADF or people who voted ADF are going to have their guns taken away. I don't know exactly the gun laws over there in Germany, but I'm sure you have to be licensed and all that. So people are going to lose their gun licenses because they vote for the ADF. So they are actively trying to suppress the democratic process. They have a demographic collapse, and their industrial base continues to collapse. The German people, especially the young people, are waking up. And so this is just a quick chart of their industrial base. And you can see it's lower than it was back over 12 years ago. This is horrific. Germany is continuing. And, with this demographic decline, this trend is going to be very hard to reverse. Very hard to reverse. It's kind of being locked in right now. So it's not looking good in Germany. They probably need some money badly. Perhaps their banks are struggling. Perhaps there's They want to do some spending in the government to suppress their democratic process over there. So they are needing the money. They're not an anti-Bitcoin stance right now. They're just needing the money badly. So we will see how this develops, and I might have to change my opinion on that. But I'm open to doing that. I'm not right on everything. I've been here a long time, and so I think I have some intuition about things, and I understand the financial system, I think, better than a lot of people. So, when I say this, I'm open to being wrong, but this is what I'm going with right now. That's what I'm thinking is happening. Okay, the ETF flows turned positive last week following the record-setting 19-day streak of inflows ending on 12 June. The Bitcoin ETFs experienced a string of outflows. These outflows seem to have stopped with the shortened week last week, seeing a total of 238 million of inflows. To put that into perspective, this is roughly the same amount of dumping going on by Germany until today. So today, the dumping by Germany was off the charts. But until today, before today, this was roughly the same amount of dumping happening by Germany. Year to date, the average inflow of the ETFs is still 118 million per day. So we can take a look at this chart here. See, we have this record streak of 19 days positive inflows. This was like overall a better streak back here, but we did have a couple days of these negatives. See, so that broke up the streak. This streak lasted 19 days. Then we had a negative period, and now we are back positive again. I think we're going to have pretty big inflows today as well. Of course, we will be watching that later on. All right. Metaplanet, Bitcoin, and Bitcoin Magazine plot thickens. Now, I don't. This never crossed my radar, but it just came up on Twitter, and so I thought I'd write a little bit about it. David Bailey, back a little while ago, he said that they bought into a zombie publicly traded hotel company, being Metaplanet. Okay, so we bought into a zombie publicly traded company. They don't say they bought a controlling share. They don't say much of anything else, but except for we. Who's we? Is it him? Is it BTC Media? Is it some other fund that he has, UTXO Management? Who is this we? But they bought Metaplanet here, and they're going to start running the MicroStrategy playbook. So I was unaware of this move, but it makes sense. Bitcoin Magazine started UTXO Management, where Dylan LeClaire and Sam Rule ended up after leaving Bitcoin Magazine Pro. And of course, I'm writing for Bitcoin Magazine. I took over for Dylan and Sam after a 6-month hiatus, where the newsletter was kind of dead for about 6 months. Then I came in, but they went over to UTXO Management. Sam is still at UTXO, but Dylan has moved on to Metaplanet. Metaplanet's largest shareholder is MMXX Capital, which is a quote-unquote cryptocurrency accelerator. It's hard to find any information on the company itself, especially due to its website being private. Note, they own 21 million shares. So we can make this bigger. You can see MMXX Capital Limited. They are a shitcoin shop. David Spencer, not David Bailey, is the second largest holder. But there you go. However, they don't hold a controlling number of shares, with 63% owned by the general public. And you can see this breakdown. General public owns 63%. Private companies, which MMXX would be in, they hear 13.9. So there you go. Therefore, I don't know exactly what Bailey is talking about here. The board has not changed recently. I think the most recent change to the board was in 2013 or 14. So it's not like they bought some controlling share and they took over Metaplanet and they completely replaced the board and they're doing things. No, this is the same board as it's always been. There's this new MMXX has bought 12% stake, but they are shifting this strategy. So unless Bailey is associated with MMXX, which I think he is, who is now the largest shareholder, and convince them to pivot to the strategy and installing Dylan as director of their Bitcoin strategy. So kind of makes sense that this Bitcoin Magazine stuff goes into here and Dylan follows the strategy over there to Metaplanet. Now, this is not a dig on anybody. I'm just trying to look in and figure out what's going on here. So the one dig I will have is the investment strategy of MMXX. It's a major shitcoin investor. And so that's the one dig out of this whole thing that I would say. All right. That's all for Bitcoin headlines. We will talk about price here down below, but let's get into macro. Let me check and see what we got here for comments. Usually more people are tuning in on Twitter. Let me go check Twitter and see if it is streaming, because it says streaming, but there is not a lot of. Usually we're getting about 200 people watching, but let's see what's going on here. Profile. Yep, we are going live. All right, so we'll see if more people jump in, but usually we're up about 200 viewers by now, so I will keep an eye on that. All right, macro headlines. Chinese government bond market could force government selling. I did get pinged about this on Telegram this morning. Somebody shared, I think it was a tweet by Joe Carlaseri, I believe. I'm scrolling up here. Yes, Joe Carlaseri. But okay, so I looked into it some more, and I decided to include this here on the report about what's going on over there in China. This is an interesting story if you think of the mechanics of it. Chinese government bond yields are crashing to record lows due to horrible economic conditions there. And let me just show you the chart if it loads. This article is not loading. Oh, maybe it's because it's referencing something else. Let's see. This archive link is not coming up. Oh, there we go. All right. So I did archive it, and let's go down to this image here. And you can see the China bond frenzy extends with record low yields. So this yields are going down, meaning prices are going up. Now, why would yields be going down? Most people think it's because governments cut rates, or the PBOC or the central banks cut rates, so then yields fall. But that's not what the case is here. In all cases, yields fall generally because of bad economic conditions. And so people are fleeing to safety. So you can see here, peaking out in about 2013, 14, and it has been down ever since. And now we are at record lows. So this is a flight to safety, the end of the Chinese economic miracle, the end of their economic model. And the bonds continue to sell off. So I'm having some technical difficulties here. I'm getting some feedback of some sort. Anyways, okay, let's continue with the newsletter. I'll have to figure out my technical difficulties later. So the Chinese bond yields are crashing to record lows due to horrible economic conditions. What does the Fed typically do when the U.S. enters recession? They buy bonds, or they asset swap for bonds. They do QE, right? People say QE is money printing, where they don't take money, but they buy, quote unquote, buy bonds from the market. That supposedly puts money into the system, which it doesn't, but that is known as stimulus. QE is seen as money printing, is seen as stimulus. Well, yields, however, will start to fall naturally. The Fed starts buying bonds, the exact opposite of what China is likely to start doing here. We are told QE is stimulus. And now in China, we are told that QT is stimulus. So China is supposed to be selling bonds. They're selling government bonds. They're doing QT. So which is it? Is QE stimulus or is QT stimulus? The macro pundits are going to have a hard time figuring this out. I actually think this is a smarter move by China. This is actually the stimulative move, is to get more bonds out there. Now, it would be even better for their economy if they went and did more deficit spending and put more bonds out there. Now, I'm not saying that that is the best way to run an economy. Okay. I'm a sound money guy. I'm a Bitcoiner. But I'm saying the way the system is set up, the best thing to do for China would be to deficit spend. But they can't do that. Why? Why can't they do that? Because the yuan is already under pressure. And if they start doing that, they're going to put more pressure on the yuan and not be able to keep the relative um, interest rate, or the relative exchange rate that they have right now, around 7.25 ish per dollar. It would go to 8 or 9. I mean, it could get pretty crazy. So they can't deficit spend. So what are they doing? The central bank is going to buy or borrow these government bonds and then resell them into the market. Bottom line for this story about China is that their economy is in a slow motion communist collapse. We can't say free fall because there are so many communist regulations to keep the economy from becoming marked to market. Also, notice in the article, the PBOC has to borrow bonds to sell them, which does not match other central bank playbooks. They even say in the article, this is kind of unprecedented, that the government or the central bank is going to borrow bonds to sell them. That's not what the Fed does. That's not what the BOJ has done. That's not what the ECB does. None of these other major central banks do this. So this would be kind of a unique thing, a unique policy response from the CCP. All right. On to the next story. French elections. So the National Rally won the popular vote by a large margin. You can see here on the results, National Rally got over a third, almost 40% of the vote, but they lost to this alliance up here, the far left and the left, the Macron left and the far left. What did I say? The other parties strategically dropped candidates for seats to get this outcome. France is going to get hotter because of this. The New Popular Front are already demanding Macron step down. This will likely lead to new elections soon anyway. So, the more that they try to suppress this natural pendulum swinging back to sanity and back towards nationalism and populism, the harder it's going to swing. All right. So they might have gotten through this election, but now they're already eating their own. And by the time the next election comes around, it's going to be an even harder pull for them. And most likely Le Pen and National Rally wins. Okay. So that's going on in France. Other main macro events for the US, at least, coming up this week. The biggest one is CPI. I will be live streaming that on Thursday, if at all possible. And PPI then on Friday. So these are the things coming up this week. June CPI will be released Thursday. There is a consensus forecast of 0.1% month over month. So the year over year will be falling again. It's replacing a 0.2% last June. So anything under 0.2% will make the year over year number come down. This base effect will get very interesting in August because August of 2023, there was a 0.5% month over month. Therefore, within 3 months, we might see a year over year CPI number drop to 2.5% or below. So we'll be watching CPI. Okay, let's get into price analysis. But before I do that, let me check the comments, see what's going on. There must be something going on with the stream because usually I'm getting, like I said, 200 people viewing, and they are not that viewing right now. So anyways, let's continue. Bitcoin price. Last week I said my important levels to watch are the flag top at 61,800. If we close below that number, we will likely see a lower low close and bullish divergence. Well, that's exactly what happened. Last week I warned of a possible downside, though I'm still overall bullish. We did break below 61,800 that I warned about and did close at a bullish divergence in oversold territory. So here is the chart. And I'm sorry, Telegram, let me make this bigger. So here's the chart. 200-day, we are below the 200-day, 50-day, 20-day. We're below all of the moving averages, really. But we are forming this nice divergence. And then I saw another Bitcoiner that I do follow, Jeff Ross here from Vailshire Capital. And he is watching the same thing, actually. He is talking about this divergence here. He's showing M2 as well. This is not nearly as important, but he's watching the divergence just like I am. And like I have pointed out for over a week now, waiting for this to happen. All right. From a mood perspective, we are very bearish, but the context is extremely important. We aren't bearish in a neutral stance or even near an all-time high. We are bearish in a very oversold position with a bull div. So, it gets darkest before dawn. It gets most bearish before reversal. I mean, you have to reverse off of bearishness. Like in a down market, things are going to be bearish until they're not. So they're going to continue to be looking bearish, feeling bearish. Sentiment is going to be bearish until we reverse. So we have to find where we're going to reverse here. But we are in an oversold position and in a bear div. So that makes the probability of a reversal very high. The weekly chart is in a rare place as well, with price threatening to close under the lower B band for only the third time in a bull market in Bitcoin's history. So in Bitcoin's history, in a bull market, we've only closed below the lower B band on the weekly. This will be 3 times if we do it right now. We still haven't done it yet, but if we close like where we are on the price right now, we will be under the lower band. That has happened these other 2 times. Whether you call the COVID thing like a bull market, was this a bull market or like a mini echo bull market, then another bear market, then a bull market again? Who knows? But if we call this whole cycle here a bull market, these are the only other 2 times in a bull market that we've been below the lower B band. All right. Also of note, that was before the halving. We are currently in a bull market after the halving. So here is the bull market after the halving. We are after the halving. So this right now is unprecedented where we are on the weekly B bands. Bitcoin on exchanges has also changed dramatically since the big sell-off of 4 to 5 July, despite Germany dumping coins. There are many holders of last resort who are buying the dip. So we can take a look at this. I labeled the ETF launch. And I labeled this most recent sell-off where then Bitcoin started disappearing off exchanges, even with Germany sending coins there. Okay, let me check my levels here. All right. In fact, spot demand is the substantial share of buying, approximately 4x as much as ETF demand. So these hodlers of last resort or just DCAers, these are people that are buying every month or they're buying on the dips, whatever the case is there. This is 4x the demand of the ETFs. You can clearly see on the chart below that the fundamental flows do not match price action over the last couple weeks, telling me that this is a FUD-driven pricing and will snap back the other way once it starts moving. So this is from Checkmatey, and you can see this is long-term holder spending, the blue, GBTC outflows. So these are the negative flows, but then we have ETF inflows here, and then we have overall inflows, and he's measuring this by total realized cap change. And you can see right now, recently, the ETF inflows is dwarfed by this overall net inflows. And that majorly dwarfs the selling from the long-term holders or GBTC. So we have this divergence here where we do have at least a period right now of higher inflows, but price continues to drop. Now, why is that? Most likely it is because, price is set on the margin and there is just this really bearish sentiment out there. People are trying to price in certain things that aren't necessarily registering right now. They're trying to price in Germany dumping. They're trying to price in Mount Gox, but they're overestimating the bearishness. So I talked about this a lot in recent weeks. People tend to overestimate bearishness and underestimate bullishness. So I think that's what is explaining this divergence in price compared to the inflows. All right. Of course, it's impossible to call an exact bottom, but we can look at certain indicators and what they're telling us that this drawdown is close to over. In my opinion, price has bottomed. Man, there's a lot of typos. Sorry about that, guys. In my opinion, price has bottomed or will bottom with one more flush, and that being less likely. With ETF flows turning positive again and FUD around MT GOX disbursements waning, and Germany unable to maintain dumping for much longer, so they can't really dump. They can't continue to do the 16,000 a day. They might have one more day like that, but I think they're down to 22 or 23,000 total Bitcoins to dump. So, that's unsustainable dumpage. That cannot continue. As well as the price being oversold on the daily for the first time since August of 2023. All these things are pointing to limited downside risk. The preponderance of risk is in an upward move. So there's a ton of liquidation fuel above the price. I did not include a heat map on this week, but the preponderance of risk is to those shorts to get squeezed above the price. And that can make it happen very, very rapidly. Important levels to the downside is a new intraday low below 54,300. If that breaks, price might give us a gift of being able to buy at 50,000. To the upside, we have to be eyeing the 50-day moving average. That's at 65,400, or the 20-week also right in that same area, 65,200. So let's take a look at the live chart here. And I have the hash ribbons up. Let me get rid of those. So we have a daily. Like I said, we are green on the day, which if you have 16,000 Bitcoins being sold by Germany, that means there must be a lot of inflows coming in from somewhere, either the ETFs or the spot market. But let's add in some moving averages. We'll add in the cluster of moving averages that I talked about last week. And you can see below the 200-day, I mean, this looks very bearish, guys. It looks very bearish. But again, everything's going to look bearish until it doesn't. The minute this pops above the 200-day, the 20-day is going to be right there. It might pop right above the 20-day as well. And all of a sudden, we are bullish again, trying to break through this resistance up here at 65,500, which is also the level that I said we are eyeing for the upside. So this could move very rapidly upward, depending on what goes on with Germany over the next couple of days. But again, they only have, at this rate, they only have a couple days left of dumping. All right, so that's the price chart. Let's get into mining section. So mining headlines. Bitcoin mining profitability rose in June as market adjusted for the halving, according to Jefferies. Bitcoin mining was more profitable in June than May as the price of the cryptocurrency, Jesus Christ, the price of Bitcoin rose 2% and the network hash rate dropped by 5%, and the market adjusted to the effects of the halving. Investment bank Jefferies said, all right, June was a month of modest recovery from the immediate impacts of the halving that were most pronounced in May. So yes, they were pronounced in May because remember in April, the halving happened between the 19th and the 20th of April. And there was a big spike in fees because of the Runes protocol launching, and there was all sorts of traffic on the network at that time. So fees went very high, and miners were able to, have another week of grace period. So we're getting into late April before the revenue really starts eating in from the halving, really starts eating into the miners' profitability. Then, of course, then they say that it was most pronounced in May because, yes, it started getting priced in May. But June, there was some recovery because of difficulty dropping and overall less efficient miners turning off their or miners turning off their less efficient equipment. So their profitability went up a little bit in May, and they were able to recover. So here's the story. I think it was from Bloomberg. Link to it in the bullet point. We have some more here. Jefferies, the bank, noted that a number of Bitcoin miners have pivoted towards a high-performance computing and artificial intelligence hosting to diversify their revenue and capitalize on surging demand for AI and cloud computing infrastructure. We've talked about this a lot as well. It could be good. It is good during down periods of Bitcoin, the Bitcoin price. But when Bitcoin price is surging, this could be a hindrance to their share price. So just be aware of that. Quote, this strategic shift has been driven by the declining profitability of Bitcoin mining, particularly after the recent halving events. The US listed mining companies produced a greater share of new Bitcoin in June than May, the bank said, increasing to 20.8% from 19.1% the month before. So what is that? Almost a 2% increase in Bitcoins mined in the United States in in June than May. As they brought new capacity and network hash rate dropped. So US miners are continuing to add to their new capacity while the overall network hash rate is dropping. All right, let's go on to hash rate and difficulty. So difficulty adjusted down by 5%, which should give miners a little more breathing room. And since then, miners are slightly ahead of pace for the next adjustment in 10 days. This has been a major period of consolidation in the space where diversified miners who took the opportunity to also host AI compute, or that high performance computing, have done very well. However, once price starts to moon, the Bitcoin price starts to moon, those miners with high Bitcoin reserves will be rewarded. So a lot of the miners that had very high reserves like Riot or Marathon, they have not been rewarded with a price appreciation of their stock because other companies are using the AI mania to get headlines that they're getting involved with AI compute, and then that's being very positive for their stock price. But the tables will turn when it turns out they wasted all this rack space and they wasted all this energy on AI when the AI bubble kind of maybe has some consolidation or a correction right as Bitcoin's price is starting to move. So when that happens, watch for the tables to be reversed, and players like Riot, Hut, and Marathon. There's another one that has a lot. I think it's CleanSpark has a lot of Bitcoin reserves. So some of those will benefit from the surge in Bitcoin price, as the others diversified. The real Bitcoin miners, they did not diversify. They doubled down and kept stacking Bitcoin. All right, so that's that part. Hash ribbons, kind of saw a glimpse of those earlier. I'm just pointing out here that both of the short-term and long-term moving averages for hash rate are going up now. So there is some recovery. I mean, we had that same thing happen here. And let's see, happened a little bit here, happened here. But I'm just pointing out that they are starting to improve over the last few days. Okay. Mempool continues to decline. This is typically not the behavior of the mempool if there is downside risk. In these periods, the mempool tends to rise as people, okay, so in those periods, so with downside risk, the mempool tends to rise as people are fee insensitive to get their Bitcoin to exchanges. This matches the chart above in the price section that shows Bitcoin on exchanges falling rapidly. More Bitcoin is going to self-custody or into large custodians. So here's the mempool. You see it continues to go lower, and that is not the behavior of a market that is expecting downside risk. Okay, layer 2 and tokens. Before I do that, let me check the comments here. See what's going on Telegram. All right, let's continue. Extremely peaceful with the fire. Thank you, sir. Okay, layer 2 and tokens. Bitcoin rootstock sidechains. Unprecedented growth in the second quarter. So rootstock is an old school sidechain. They do merge mining. I'm not super familiar with them. I probably 5-6 years ago I was much more familiar with them, but as the years go, you forget some of those things that you learned. And rootstock has been around a long time. I think they do have a token as well. So it's not like a pure Bitcoin sidechain play like Liquid is or the Elements sidechains, but it is a old school layer 2. And it also it also pricks the bubble of Ethereum because you can do smart contracts and stuff on Rootstock, but people don't because there's not really a demand for smart contracts. It's a demand for pumponomics, for pump and dumps. That was what Ethereum was useful for. Because if people really wanted to do smart contracts, they would do them on Bitcoin layer 2. Okay, Rootstock, the first and most enduring sidechain of Bitcoin, experienced a quarter of unprecedented growth, consolidating itself as the leading sidechain, thanks to a record number of transactions and a series of new integrations. I'll also say about this that I expect sidechains to be the main growth vector for Bitcoin layer 2s. Lightning is great, but I think sidechains are. I can see a path toward nation state adoption through having their own sidechain, the U.S. sidechain, the EU sidechain. If there is a EU, maybe it'd be a German sidechain and a French sidechain, a Japanese sidechain. Okay, so I can see the way adoption of the sidechains can come in. It's much harder to see how people adopt Lightning on a nation state level. So that's why I'm most bullish on sidechains as the layer 2 scaling solution. According to the data from the Block Explorer, Rootstock has surpassed 13 million total transactions with a monthly average of 45,000 transactions over the past 3 months. So still a tiny amount. I mean, Bitcoin has this many in what, a couple hours, or not even like one block or something. So that's not a lot of transactions, but it's more than zero. It's 45,000 in a month. So it's getting there. It's getting there. This significant increase highlights the growing adoption of the sidechain, which offers a secure and reliable environment for building on Bitcoin. Okay. With over 60% of Bitcoin's hash rate ensuring the network security and 100% uptime since its launch in January of 2018. Rootstock stands out as a premier destination for development on Bitcoin. Maybe. No, the premier destination right now is rolling your own protocol, like Runes or whatever the other things are out there. That's the premier destination, is rolling your own protocol. So we're kind of like in the ICO phase of sidechains. Is that a good analogy? The ICO phase of sidechains, and then what would be next? Like DeFi, working on atomic swaps between sidechains. I think that is actually going to be very useful because, again, if you think that we're going to have a US sidechain and a Japanese sidechain and all these others, then having atomic swaps between them, working on inter-sidechain operations, that's kind of like a DeFi thing. So this era right now that we're in is kind of the ICO phase of sidechains, and the next sidechain era might be interoperability, but we will see how that develops over the next couple cycles. Okay, let's get into runes and inscriptions before we head out. So the use of layer 2 token protocols on Bitcoin has collapsed. Runes is a ghost town, signaling the massive lack of speculative interest in the space. When price goes down, nobody wants to be around. Okay, that altcoins are struggling. I heard that I read something, they're down 80%. So at least some altcoins are down 80%. They are struggling. That's the speculative interest in the space. Okay. Runes and inscriptions, those signal the speculative interest overall in the space. And when we have this low of volume in pink here, if you look at these pink, you see there's a lot of demand here. Demand was picking up even into, let's see, late May, early June, but it has fallen off a cliff, and there's just no demand whatsoever right now for these layer 2 token protocols. So this means that the speculative interest is not here. Wait until the speculative interest gets here. Guys, the FOMO hasn't even started in this cycle yet. The FOMO has not even started. Retail is not here. I mean, there's some retail maybe buying the ETFs, but retail is not here overall for the space. So just wait until they come. And inscriptions has been able to survive here longer than I thought it would. I thought it would just die, sputter out, but it has been holding on to a minimum level of transactions there. So that is all I have for that. If you guys like this and you're subscribed, make sure you share it with people. Subscribe with other like friends and family if you want to. They can always unsubscribe. So that is the entire report. Check out bitcoinandmarkets.com to sign up for free. Just taking a look at the comments some more here, if we have any. All right, guys. Well, that's going to do it. Thanks for hanging out. Thanks for subscribing, and I'll see you on the next one. Bye.